Hi, thanks for tuning in. This is the US Futures weekly chart analysis for the week ending 4th of April 2025. First chart is the US dollar index futures, which you can see closed lower this week. Price pushed below previous support with a wide spread and an increase in volume, but recovered quite a bit of the lost ground during the week to close just above mid-bar. So there is still some support in this market. You would suggest this is buying support. There's a reluctance for the market to move lower. At this point, the market is below previous support, which is here, but it has recovered quite a bit of the lost ground, and it will be the response next week that's most important. Next chart is the E-mini S&P, which closed lower with a very wide spread this week. Volume was increased, but not substantially so, very similar to previous volumes. This suggests the market has stretched lower due to a lack of demand in the market. What happens when everyone's on the same side of the trade? In this case, there's overwhelming supply in the market. The selling pressure is huge. There's not enough demand to satisfy the number of sellers in the market. So price is forced to stretch lower with an exaggerated spread in order to find sufficient buyers to satisfy the sellers. You'll see this quite often in markets when there's a biased trade and everyone's trying to get on the same side of the trade and it's not a balanced market. In these cases, it's usually the response that's most important. If there's further downside follow through in response, the weakness can be confirmed. But if instead the market attempts to recover or over a period does recover, you know that this was an exaggerated push lower and the weakness hasn't been confirmed. US Treasury 10-year note futures, you can see back here where there was some buying support emerge down here. Price broke out. It's pushed up and been travelling sideways here for the last month. This week, prices attempted to push higher, probably when the weakness in the US dollar emerged. And then as the US dollar recovered somewhat, this market has pushed back down to close mid-bar. Importantly, price remains above the minor breakout line here. So we'll see how this market responds next week. But you can see what this market has done in response to the weakness in the US dollar. Copper price futures. Copper price futures appear to have an exaggerated wide spread this week, similar to what we were talking about earlier. As a recap, back down here, the market was building some strength. You saw a breakout on this bar, and then price went into a period of consolidation, a further breakout here, further consolidation, then a push higher until we saw some weakness emerge in this bar. And this is the response to the weakness. Now, volume was about the same as the previous week, but the wide spread suggests that everyone was on the same side of the trade this week. And market stretched lower under real heavy selling pressure. And it's had to really stretch lower in order to find sufficient buyers to satisfy the sellers. The response next week will be important. I expect the market will attempt to recover at least somewhat next week, but we'll see. Gold price futures. Gold price futures did close lower this week, but not substantially so. We just draw in some lines to make the chart come alive. You can see that price pushed up initially. It's moved down along with a lot of the market, but price still remained within the range of the previous bar, adjacent to its low. Volume wasn't overwhelming. It was about the same as the previous week, just fractionally higher. This is a market where there was sufficient support in there to absorb the supply from the sellers, and the market has held on, not comfortably, but it's held on pretty well. And I would expect after maybe a period of testing for supply in response early next week, you'll see an attempt to push higher again if all these markets stabilise to some extent. Silver price futures. Silver price futures, the highs of the current range were there. This is where the market spent some time consolidating and building up some strength. Here was your initial breakout. Then there was a period of consolidation in response. Secondary breakout here. And the market's pulled back in line with the rest of the market this week. Volume was increased. This market's always a little more volatile than gold. But I don't expect that this widespread balances very well with the modest increase in volume, perhaps to some extent. But generally, volume and spread move hand in hand. Widespread, high volume, narrow spread, low volume, and they should balance to a reasonable degree by your eye. And in this case, I would suggest that the spread was wider than the volume suggests, which means this market probably did have an exaggerated push lower in the same fashion as some of the previous markets. And it'll be the response next week that is most important. And you'll probably see some sort of attempt to recover next week because this was an exaggerated spread. But it will only do so if markets stabilise next week. If we still have this ongoing volatility, you may see a little downside follow through, but it will be half-hearted and probably see some buying support come in. So with reasonable volumes and narrowing spreads, suggesting that the buyers have moved in. But that remains to be seen at this point in time. Like crude price futures, were also involved in this volatility. Here was the lows of the previous range through here. You can see prices moved below previous support. Here, volume was high or above average. Spread wasn't as bad as some of the other markets, but it was still quite wide, wider than any other bar on this chart by the looks. So I would expect this was an exaggerated spread as well, because we've had volumes this high before, but we don't have spreads this wide. So I expect this was an exaggerated spread. And if the markets just settle somewhat and start to reset, I would expect an attempt to recover next week. It may not completely recover, but an attempt to recover. It's important. Into the currencies now. This is the euro-US dollar currency pair. Here was your initial breakout after we saw some buying support emerge down here. There was a secondary breakout and there was a period of consolidation over the last month. Price pushed higher this week, most likely as the weakness in the US dollar emerged, because this market does trade very strongly the inverse of the US dollar and with less of its own fundamentals involved. That's the euro. So the market's pushed higher as the US dollar's pushed lower, and then as the US dollar's recovered, you've seen price move back down for about a mid-bar close. Price does remain above the previous highs of the range, so that's a positive for this market. And it will depend to a large degree on how the US dollar trades next week as to how this trades, although it'll be the inverse. British pound currency futures weren't as strong as the euro this week. We saw buying support emerge down here after price broke down. Here was the initial recovery and the minor breakout. Here was the serious breakout and the 3 weeks of consolidation which emerged in response. Price attempted to push higher on the weakness in the US dollar, but as the US dollar recovered, price pushed back below the highs of the range. That's actually slightly weak there. It may be overdone or exaggerated in the near term. So we'll just wait and see what the response is there, particularly as the euro closed back above this line. So the response in this market will probably be important. Japanese yen currency futures. We saw this market build some strength down here, as did many of the currencies. Here was some bullish absorption which emerged prior to the initial breakout and test for supply. Secondary breakout here. And the market's pushed up this week in response to this period of consolidation. But when the strength in the US dollar developed later in the week, price moved back down and it's closed right at this important level. So once again, we'll be looking for the response to this next week, and it will be the inverse to the US dollar to a large degree. Aussie dollar currency futures. This market's been quite weak when compared to the other currencies we've just looked at. This market's been barely holding on at the important 62-cent level. And with the US dollar's initial weakness, the market could only push up towards this 64-cent level. And when the US dollar recovered, this market really capitulated and moved lower. And down here is the next lower previous support zone, which begins at 60 cents and moves down to about 55 cents. So this market has broken below this important 62-cent level and has settled back near the 60-cent level, which is quite a lot of weakness in this market. I feel the market will probably try to settle around the 60 cents. There may be an attempt to push higher, which will likely fail, and price will move back and be settling around the 60-cent level, at least in the near term. But we'll see. Bitcoin futures. Bitcoin futures continue to trade sideways down here. We had the market breaking out back here and push higher. There was a week's consolidation in response before the market pushed up again. This is where the highs were established. Each time the market traded above this level, supply was drawn out. That supply eventually pushed price back down. And after a period where the market attempted to recover up here, price pushed lower on this bar. And since then, the market's been trading sideways in response. There was an attempt to push higher up here, which failed. And since then, you've got all consolidation bars for the last month. And volumes have reduced to a reasonable extent. So selling pressure doesn't appear to be overwhelming at this point, and the market's attempting to recover and reset after the weakness emerged up around the $100,000 level and slightly higher. This week bar isn't particularly strong. There was not enough demand to push price higher here, and price closed mid-bar. But volume was low and selling pressure appears relatively low. The market's trading sideways and relatively comfortably sideways. It's not testing the lows, which are just below the 80,000 level. It's not testing those levels. It's sitting up above that. So while it's up there, it's attempting to consolidate. Any break below this level would likely see price come down to test this level in response. Just back to the US dollar index futures quickly. You can see this market did break below this previous support level where the market has been attempting to consolidate. It has recovered quite a bit of the lost ground this week, but does remain below this important level. What happens in response next week will be important. If price was to move lower in response, we had some downside follow through, I would expect the market will make a pretty strong attempt to recover at the lows of the range, just above the 100 level. And I also expect that if the market does attempt to recover somewhat, it may be a little difficult to get back above this previous support zone. supply will be drawn out at that level, at least initially, from anyone who's been locked into a poor trade in here who may want to get out for break even. So if there's an attempt to recover, I expect there will be some resistance just below the 104 level. So the response next week is going to be pretty important, and it will play its part in many of the other associated markets. Okay, thanks for your time. Enjoy the weekend. We'll see what next week brings. Thank you. See ya.